are investors correct in sort of shrugging off the sales decline that we've seen in iPhones?
Yeah, this is a major step in the right direction. I mean, if you look at iPhone 11 in terms of what's happening in China, right now that's 15 to 20% above expectations. And you see that in terms of guidance as well as in terms of the core numbers. You have services, which is right around the corner right now, but the Rock of Gibraltar continues to be the iPhone. That's stronger than expected. You go back 6 months ago, if someone told you you have the US-China UFC trade battle, Apple's the poster child, smartphones maturing, you'd think it's stock that is probably 40, 50% lower from here. And it just continues to be our thesis. 900 million iPhones right now worldwide, about a third of them are a window of an upgrade opportunity. That's why the stock's where it is, and we think it's just in the middle innings of a upward cycle.
So how popular have the new iPhones been as well?
They've been, I mean, I'll call it an hour before the World Series, Game 7, a home run. And if you look right now, this is something where not just in the U.S., but in China, you had the price cut, $50 price cut, which has been key in China. But in terms of the U.S., right now, from our Asia checks over the last month, we think tracking about 10% above expectations. Right now, the tea leaves, you could be looking at 200 million units going 2020. And if that holds, you'll have a stock that has a 3 in front of it.
Dan, the issue is that the easy growth period is over, right? I mean, they had pushed sort of every button, pull every lever to get more sales across more products with more discounts, et cetera, you know, in more affordable products. But we're reaching saturation in a lot of markets.
And that really continues to be why services are so key. That's the next step in terms of the monetization. But it comes down to the install base. They have a golden install base. And right now you have about 350 million iPhones in the window of an upgrade opportunity, including 60 to 70 million of those in China. So that upgrades the fuel in the engine over the next 12, 18, 24 months. And I think where many of the naysayers and many calling fire in a crowd theater on Apple, where they've missed it, is in terms of that install-based story. And you look at this quarter, this is a crowning achievement for Cook and Cupertino.
Do their efforts when it comes to services, the bundles, you know, there's not that much we know about it yet. They're still sort of working on what combinations. Does it impress you, and do you think it's enough in this market?
Look, in our opinion right now, that has potential to have 100 million subs in the next 3 to 4 years. The bundling was a genius move. The pricing was key. That was a major shot across the bow, Netflix and others. And you have Disney as well as Apple. We think they could disrupt about 10% at a minimum of Netflix install base. Content's missing right now in terms of the platform. I continue to think there's going to be a step-up process from an organic content as well as acquisitions. We look at Lionsgate, A24, Sony Pictures as potentially real strong candidates for Apple to go after from a content perspective, even though historically acquisitions have not been the core DNA in Cupertino.
Dan, one stock that's falling after hours is Twitter, after they announced that they would actually ban all political advertising globally. How significant would this be?
You look at Twitter right now, I mean, that's kind of been a train wreck in terms of earnings season. You look at Facebook and others have been strong. I mean, they have some heavy lifting ahead. And I think right here, it just shows is this going to be another advertising headwind for Twitter? What engagement looks like? And this is not the news you want to see after what's been a train wreck over the last week.
Yeah, it seems like a reason for selling, right? Because it seems like the business that comes from political ads isn't actually that big for Twitter. But does this set up really, you know, Facebook embracing the ground that it wants to own ahead of the election as being politics, and Twitter stepping back from that?
It's a great point. I think it's a tale of two cities right here. And you look at Facebook, Zuckerberg, I mean, you saw Sheryl before, they're going on the offensive. And I think that's been something you've seen in terms of the numbers, in terms of engagement, monetization. And they've done a phenomenal job hand-holding within the Beltway in Brussels. And as we go into this political season, I think engagement is going to continue to increase on Facebook. Advertising is continuing to step up. You look at Twitter, I mean, they're starting to hit a stumble where Facebook's accelerating into this next phase of the growth. And I think this is something, look, I think this is a major positive for Facebook in terms of the quarter and guidance, while Twitter, I think, is still licking their wounds.